Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Alright, today our tutorial session we cover on capital budgeting part 1. Before I want to proceed, I really hope students I cover on my lecture on this topic, capital budgeting. Alright, before we start our tutorial, we start with Umul Kitab Al-Fatihah. Amin. Alright, class. Our tutorial is on capital budgeting. We will cover on past semester question September 2012 question 2. Alright, class. In this question, Surin Sundaram Berhad is considering replacing a 3-year-old machine. Alright, the useful life of this machine is 8 years. So Surin decide to change a new and more efficient machine. Therefore, you need to calculate first either it is bring value to the company or not. Alright, our first step, class, as I told you in class, you need to extract the information from the question. Alright, class. Question will give you details on the old machine and new machine. So we try to extract the information for old machine. Alright. First we settle the old machine first, class. First, the cost of the machine. It is RM 100,000. Okay, next information. Alright, and how many years, class? The useful life, it is 8 years. Next, salvage value. Is 1,000. Alright, class. The cost of machine, as you can see in the question, Surin Sundaram Berhad is considering replacing a 3-year-old machine that originally cost 100,000. Alright, so this is the cost, 100,000. Next, with a new and more efficient one, the old machine as a salvage value. Alright, salvage value for the old machine is 1,000. And you can see in the information, class, the old machine had 8 years useful life. So the old machine useful life is 8 years. Alright, class. As you can see now, Surin Sundaram Berhad is considering replacing a 3-year-old machine. So we got another 5 years to go. Alright, class, that information is on an old machine. Now, we extract information for new machine. new machine will cost 250,000. Alright. Cost is RM 250,000. Next, alright. New machine cost 250,000 and useful life of the machine, class, as you can see in the question, it is 5 years. Next. Alright. As you can see, class, the import machine is expected to incur freight charges of 4,000, insurance of 10,000, import duty of 7,000, and modification cost of 20,000. So, we state that all the costs in the information for new machine. So, first is freight charges. RM 4,000. Next, insurance RM 10,000. Import duty RM 7,000. Last class, modification cost. RM 20,000. So class, actually the total cost of the new machine, the purchase price of the new machine is, alright, based on accounting concept, you must include all costs including freight charge, insurance, import duty and modification cost in your purchase price. Therefore class, your total cost of your machine is so class, the total cost of machine, alright, 250,000 plus 4,000 plus 10,000 plus 7,000 plus 20,000, you will get RM 291,000, 291,000. So this is your total cost of your new machine. Alright. Alright, the useful life of new machine is 5 years. Okay, next class. In order to operate the new machine, 2 employees will send to overseas for 1 month. So the company spent 12,000 each. So this is considered as cost of training. So what is the total cost? RM 12,000 times 2, you will get RM 24,000. Alright. So the new machine have a salvage value of 10,000. So the salvage value RM 10,000. Alright. That is your first step, class. Alright. Information. First, extract information for your old machine. So you must extract all the information from the question and list it out in your answer script. Cost of machine 100,000. Alright. An old machine as a salvage value 1,000 and 8 years useful life. Alright. And you got another 5 years to go. Alright. Class, as you can see in the question, the Surin probably we sold the machine for 60,000. Alright, you can put in your information, your selling price. RM 60,000. Alright. Okay. For your new machine, I repeat class, don't forget to include all costs such as freight charges, insurance, import duty, modification cost must include in the purchase price. So the total cost of a machine actually is RM 291,000. Alright, so this is the information, old machine and new machine. Alright, class. Step 2. Calculate depreciation for both machines. Alright, step 2, calculate depreciation. Alright, what is the formula for depreciation? Alright, you have two type of formula of depreciation, two method to calculate depreciation, which are straight line method and reducing balance method. Alright, based on this company policy, as you can read in the question, the company policy is to provide annual depreciation based on straight line method. Alright class, annual depreciation is based on straight line method. So you must use formula for straight line method. Alright class, do you remember the formula? The formula for depreciation using straight line method is cost minus salvage value divided by n. Alright class, as you can see right now class, it is easy for you to calculate depreciation when you have extract all the information. Yes, because as you can see in your step 1, you got your cost. Okay, now you can get your salvage value and your n. So from the information, it's easy for you to substitute the information into the formula. Alright, first you need to calculate depreciation for your old machine. Alright, depreciation for old machine class using straight line method formula. Alright. Okay, go to step 1, old machine. The cost of the machine is 100,000. Salvage value is 1,000 and your N is 8 years. Alright, sub to the formula class. As you can see the formula here, straight line method. Cost is 100,000 minus salvage value 1,000 divide by 8 years. So class, as I told you, it's very important for you to extract the information first. So it's easy for you to calculate for the step 2 and step 3. Alright, class, depreciation straight line method, cost minus salvage value divided by n. So first you need to calculate for your old machine. 100,000 minus 1,000 divided by 8. So the answer, class, equals to 12,375. That is your depreciation per year. Alright. Class, straight line method is depreciation. The amount of depreciation will be same for every year. Alright. Class, now you need to calculate depreciation for your new machine. So using the same formula, because the company policy is based on straight line method, accounting concept also mentioned must use consistency. Alright, so using the same method, depreciation, straight line method. Alright, come we go to the information step in step 1. So what is the total cost of your new machine? Using this 291,000 and your salvage value 10,000 and your end is 5 years. See class, is it easy? From your information you only can substitute the information to the formula. $291,000 minus 10,000, your service value, divide by 5 years. So class, can you calculate? Alright, the answer 56,200 per year. Alright, that is second step. You need to calculate your depreciation. Now class, your step 3. Alright, class, step 3, you need to calculate the tax saving. Remember class, step 1, extract information. Step 2, calculate your depreciation. And step 3, calculate your tax. Alright. What is the formula to calculate tax, class? Cost. Alright, so I will show you the formula how to calculate tax. Alright. The formula here is cost of machine, cost of your old machine. Class, remember, cost of your old machine minus with accumulated depreciation. Then class, you will get cost of old machine minus with your accumulated depreciation. You will get your net book value. Minus with your selling price for old machine. We can consider as disposal price because you want to sell your old machine and want to replace your new machine. So the formula, cost of old machine minus accumulated depreciation, then you will get your net book value minus disposal price, or it's considered as selling price for your old machine. Consider as disposal price, then you will get your profit. Class, remember, we need to before you want to calculate tax, you need to calculate either is it loss on disposal or profit on your disposal of your old machine? So first, you get profit or loss on disposal. Okay, class. How to calculate accumulated depreciation? To calculate accumulated depreciation, your amount of your depreciation per year okay, just to show you what is the formula, class. The formula for accumulated depreciation is your depreciation per year time with, alright, time with how long the old machine life with your company. As you can see in the question, Surin Sendirian Berhad is considering replacing a 3-year-old machine. Your current year machine is like 3-year-old machine. So times with our class, depreciation per year. How you want to calculate depreciation? You have calculated it in your step 2. So you put the answer, depreciation per year time with your current age of your machine. So it is 3 years. Alright. Current age of the old machine. So class, the formula for accumulated depreciation per year, you can get the answer from your step 2. Alright. Then you time with the current age of the old machine. Then we get your net book value minus your disposal price. Then you get either profit or loss on disposal. Alright, class, after you calculate your profit or loss on disposal, alright, if the answer is profit, we consider it as tax paid. So what is the formula of tax paid? Or you consider as tax income, tax paid. Alright, the formula here, the answer that you get from your profit on disposal, AAA, you can, the answer we put in the formula, time with your tax rate. Question, have we give you the tax rate? Alright, class, if the answer is loss, we call it as tax saving. Equals to, using the same method, you can take the answer from your loss on disposal, either one, right? depends on the question. Is it profit or loss? So A time with your tax. Okay. Alright, class. Can we apply this formula into the question? Calculate tax. But before you want to calculate tax, you need to calculate either it is profit or loss on your disposal, your old machine. Alright, based on the formula, class, cost of old machine. Come, we put the answer. Alright, what is your cost of old machine, class? You can get from your information. That's why step 1 is very important. You need to extract information correctly. Alright, the cost of machine is 100,000. Alright, 100,000. Alright, class, based on the formula, depreciation per year for your old machine. Alright, accumulated depreciation for your old machine. Alright, based on your step 2, depreciation for old machine is 12,375. Correct? So you can put depreciation for old machine. Depreciation for your old machine is 12375 times with 3 years. That is the age of the old machine with that company. 12375 times 3 years. Then you will get the answer. So class, your total accumulated depreciation is 37125. So that is your accumulated depreciation. Alright. So just now as I told you, class, it's very important to extract your information. Step 1, all your information regarding your old machine. Step 2 is your depreciation amount for per year. So you can substitute in the formula when you want to calculate your tax. So your cost of a machine 100,000, accumulated depreciation is 12375 per year times 3 years. Class, I want to remind you, you only calculate tax for your old machine. Clear? You only calculate tax for your old machine. Alright, now you get the answer. Correct? So your accumulated depreciation is 37125. Alright, class, 100,000 minus 37125, you will get your net book value 62875. 62875. Alright, class, in your step 1 information, as you can see, what is your selling price or considered as your disposal price? It is 60,000. 60,000. You see, when you have all the information, so easy for you to extract and sub into the calculation. Alright, class, cost of old machine minus your accumulated depreciation 37125, and then you get your net book value 62875 minus your disposal price is your 60,000. Do you get loss or profit, class? Class, actually, when 62, your net book value, your value of your old machine, alright, okay, because just now you have calculate your total depreciation, Alright, means that your real value of your old machine, 100,000, have depreciated. Alright, in that 3 years, the amount of your depreciate value is 37,125. So the balance is 62,875. Means that the value of your old machine, another 5 years, is 62,875. However, you only sell your old machine, your disposal price, 60,000 only. Means that, class, you lost on your disposal. Why, class, we consider loss? Loss 2875. Why, class? Because your value of your old machine still 62,875, your net book value. However, you only sell around 60,000 only. Therefore, class, actually you lost on your disposal by 2,875. Class, now, is it tax paid or tax saving? Alright, as you can see, you are in the condition of loss on disposal, so you have to use tax saving. So what is the formula? Alright, the answer that you get from your loss of disposal is your 2875 times with your tax rate. Class, based on the question. Alright, class, you can see the question on the left side. You see here, class, the company tax rate is 25%. Do you see, class? The question tell you already the tax rate is 25%. So the tax rate here is 25%. So, class, the answer for your tax saving, 2875 times with 0.25, you will get 719. So you have now, class, step 3 settle, correct? Because you have get your amount of your tax. So your tax saving is 719. Alright, next, class, step 4. Step 4 is, okay, you need to calculate what, class? Alright, class, step 4, you need to calculate net working capital. Can I know the formula of net working capital? Current asset minus current liabilities. Alright, class, when you have to calculate net working capital, alright, actually the question asks you to calculate initial outlay, annual cash flow, and your terminal cash flow. But my suggestion here, class, before you want to calculate all this initial outlay, annual cash flow, and terminal cash flow, you need to follow all these steps first. So easy for you to calculate all the IO, annual cash flow, and terminal cash flow. Class, the formula for net working capital here is current asset minus current liabilities. So as you can read in the question, to buy this machine, the company has to borrow 200,000 from public bank, of which 1,889 interest is paid per month. Alright, so that is the information. Alright, next, the new machine. Alright, class, actually you need to calculate net working capital for your new machine. Remember step 4 what class? Calculate net working capital for your new machine. Alright. They will inform you. Alright. Regarding the information on current asset and current liabilities. Alright class, as you can see, the new machine will increase. New machine will increase operating capacity, which means the inventory level will raise by 25,000. Class, is it inventory is current asset? Yes. Inventory is current asset. Alright, next, in addition to that, short-term borrowing. Short-term borrowing classify which category? Is considered as current liabilities. Correct class? Means that you can sub the information directly. So your current asset is 25,000. You see class? 25,000 minus 11,500. That is your short-term borrowing, your current liabilities. 11,500. So your net working capital here is 13,500. So actually increase in NWC by 13,500. So that is your net working capital. Alright class, step 1, step 2, step 3 and step 4. Okay, alright class, now you can calculate what the question 1. First you need to calculate your initial outlay. So this is the step of formula. Step 5. Initial outlay. The formula for initial outlay class. The formula for initial outlay. Okay. Class, formula for initial outlay is, alright class, actually step 1 is very important. I repeat, step 1 is very important because you only can substitute the information into the step 5. Alright, first, total, the formula, total cost of new machine. Total cost of new machine. Alright. So next, you need to add with your training cost. Okay. Your training cost. Next class, don't forget to add with your increase in NWC. Alright, class. First step is like this. Initial outlay, step 5, alright. Total cost of your new machine, you must plus with your training cost, must plus with your increase NWC. As you can see, class, from where you can get the total cost of new machine? From your step 1. Next, your training cost also in your step 1. Correct? As you can see, new machine, cost of your training. See, training cost 24,000. So, how about increase in NWC? You can get from your step number 4. So now class, is it easy when you extract all the information based on your step 1, 2, 3 and 4? Yes, you only sub in the formula. Alright, come we put the answers. Total cost of your new machine is 291,000. Alright. 291,000. Your training cost is 24,000. And your, alright, so how you get your 24,000? From your step 1. You see? Alright, next is your increase in net working capital. As you can see in step 4. Okay, 13,500. Alright, class. Initial outlay means that we want to see your total outflow. Alright, because you have to pay for the new machine 291,000, and your training cost 24,000, and increase in your asset and liabilities 13,500. So now class, through selling your old machine, you get your inflow, right? So is that your total outflow? No, you need to calculate your net outlay. Alright, your net outflow. So just now class, your total cost is total cost of your new machine, training cost, and increased net working capital. Alright, class, don't forget to minus all your inflow. This is what class? This we consider as outflow. And minus all with your inflow. Alright, what is your total of inflow class? Yes, your disposal value. Remember, you sell your machine, then you get inflow, correct? Selling price old machine. The amount from where you can get class? Yes, step 1. 60,000. Remember class, minus outflow, total outflow will minus with your total inflow. Total outflow minus with your total inflow. Alright, class, just now when you calculate your tax, correct, in your step 3, is it tax saving or tax paid? If tax paid is outflow, tax saving is inflow. So in this case, it is tax saving. Alright, from where you can get class the total? From your step 3. So the amount of your tax saving, your inflow, is 719. Class, so you need to total up all your outflow minus with all your inflow. So 291,000 plus with 24,000 plus 13,500 minus 60,000 minus 719. So then you will get your net cash outflow, or we consider it as initial outlay. So what is the total for initial outlay class? Calculate. So your initial outlay is 267,781. So what is your total initial outlay now, class? So you have answered the first question, 267,781. Alright. So your initial outlay 267,781. That is initial outlay, class. Now you need to calculate your second question. Your annual cash flow. So what is the formula of your annual cash flow? Step 6. Alright. Step 6 is your annual cash flow. Class, what is annual cash flow? Annual cash flow you want to see either with this new machine. Is it bring effect on your revenue or expenses? So we want to see either this new machine increase your sale or decrease your sale. Either increase your expenses or decrease your expenses. Alright. Annual cash flow we divided by two parts. We consider as benefit or cost. Benefit is your when the situation of what, class? Benefit in the situation of increase, class. Increase in revenue or decrease in expenses. Alright, class, don't forget, step 5 is to calculate your initial outlay for the new and old machine. Now you need to calculate your annual cash flow from new machine. Okay, benefit is your when you buy this new machine, is it increase or decrease, right? I told you just now. So benefit considered as if it increase in revenue or sales or decrease in expenses. Now class, cost. Cost we consider as when in a situation of decrease in revenue or increase in expenses and changes in depreciation. I will show you how to calculate. So, class, focus on step 6. First, you need to identify what is benefit and what is cost. Benefit when the situation of when you buy this new machine, the revenue will increase and the expenses will decrease. Cost when the situation of your sale decrease, increase in expenses and your changes in depreciation, we classify it as cost. Alright, class. This is the first step for in the step 6. Alright, you need to know the step by step. Alright, how to calculate benefit, how to calculate your cost. This is the format for step 6. Format for step 6. First, list out. Alright, first identify your end years for new machine. Alright, you can see. Alright, for your info, this can get from your step 1. How many years, class? Yes, for the new machine it is is 5 years. Okay, class. Means that class, if your new machine useful life is 5 years, you need to calculate 5 years annual cash flow. Alright. So second, construct a table. Okay, list of the benefit, and cost for this new machine. So, alright class, when you want to list the benefit and the cost for this new machine, you must do a table. So how many columns for this table based on the years? So as you can see class, alright, 5 years, correct? So you must do 5 years. Why 5 years class? Because, alright, we insert more. So all is 6 years because this is year 1, year 2, year 3, year 4 and year 5. Because got 5 years. In the question you got 8 years, so you need to open 8 column. Alright, but in this question the new machine only useful life is on 5 years. So you only open 5 years column. Alright, class. First, you need to insert as many as you can. Alright, insert row below. Okay, class. Before you want to construct the table, alright, you need to know how many benefit in this machine. So as you can see in the question, now you need to find anything that is revenue or cost for this new machine. Alright, first forecasted sale from the project. Is that revenue? Yes, it is your revenue. Class, year 1 and year 3. Alright. Alright, first you need to list out the benefit first. Okay, so add up a new row. So first benefit is your, you see, as you can see, year 1 to year 3 increased by 300,000. So first is your sales, correct? Is your revenue. As I told you class, remember, you need to know what is benefit, what is cost. Benefit is what class? Anything that relate to your revenue or expenses. Is the same goes to your cost. The difference here is when benefit, sales increase, expenses will decrease, cost decrease in revenue, expenses will increase, and changes in depreciation. So first item that we see in the question, sales, correct? Revenue. So increase by 300,000. So we put year 1 300,000. Is it the same for year 2 and year 3? Yes. Make sure you put it. Copy. Why copy? Because it's the same. Is it the same for year 4 class? No. It is 380,000. It is 380,000. Class, next, you need to find the benefit first. Alright, so the benefit here, again you see, beside that, the machine will also incur the following differential cash flow. As you can see, electricity increase. Can I know what is electricity charge, class? It is expenses or revenue? Yes, it is expenses. When involved of expenses, correct? So is it increase? It is increase, correct? So is it classified as benefit? No, it is cost. Because as you can see, cost is what, class? Increase in expenses. Alright, next, salary. What is salary, class? Category expenses. When your salary is expenses, you must see the effect, either decrease or increase. Oh, it's decrease. When decrease in expenses, we can put it as benefit. Clear? So you can put in this column, row. Alright? So salary. Class, remember, if your revenue increase, your decrease in expenses, we must put it as positive. If decrease in revenue, increase in expenses, you must put it as negative. So in this case, increase or decrease? Decrease expenses 30,000 from year 1 to year 5. So automatically, can I put 30,000 for every year, class? Yes, because every year decrease by 30,000. Alright, next, manufacturing cost. What is cost, class? Don't forget, cost is expenses. When your cost is expenses, is it decrease or increase? It is decrease. Alright, in the situation of decrease in expenses, we consider it as a benefit or cost, class, based on step 6. It is benefit. So you can put it in this benefit side. So manufacturing cost. So can I know the manufacturing cost? Decrease by 150,000. So it is positive because it's under benefit. Class, as you can see, 150,000 is only for year 1 to year 3. 150,000 from year 1 to year 3. So when 150,000 is year 1 and to year 3, automatically is the same. Put it as positive. And how about year 4 to year 5? Still decrease. So we put it as benefit. Alright, as benefit, positive 180,000 for 2 years. 180,000. Alright. So class, did you see any revenue and expenses here? No. No revenue and expenses. So class, we have settled this, correct? We have recorded in the table. So now what, class? Yes. We need to record electricity charges. Alright, benefit done. Now you have to do your cost. Okay, class, can I know your cost? First, electricity charges. Class, is it decrease or increase? It is increase in expenses. When increase in expenses, as you can see, you must make sure it is negative. So year 1 to year 5, same amount, correct? So put it as negative. Is it the same, class? Yes, it's the same. Alright, class, can you see any costs, any expenses that we did not record yet? All have been recorded. Alright, class. Now, the next step is, remember, it's compulsory for you to put changes in depreciation. This is compulsory, alright? Don't forget to put it, changes in depreciation. Class, the formula for changes in depreciation actually new depreciation minus old depreciation. So how to calculate, class, changes in depreciation? Changes in depreciation, the formula new depreciation per year minus with your old depreciation. New depreciation minus old depreciation. So can I know your new depreciation? From where you can get, class? From your step. As you can see in the calculation from your step 2, then you can know your depreciation for your new machine and for your old machine. From step 2. So class, first your new machine. Okay, now we go to step 2. Alright, as you can see, class, your new machine is 56,200 minus 12,375. 56,200 equals to 56,200 minus 12,375. Okay, class, the answer here is 43825. But don't forget to put it as negative because it's under cost. 43825. Class, as you can see, old machine depreciation is only 12,375. But now your new machine is 56,200. Means that your depreciation increased. So we consider it as cost. Alright. So in this case, you can see new machine 56,200, your old machine 12,000, means that increase in depreciation. Depreciation classified as expenses, so it is increased by 43,825. So it is the same for every year because it is straight line method. Okay, class, the old machine, as you can see, we got another 5 years. And this new machine also 5 years. That's why the amount of depreciation, changes in depreciation is the same. However, if the case of, I bring example, the old machine left another 2 years. But the new machine is 5 years. Means that year 1 and year 2, your changes in depreciation is your new machine minus your old machine depreciation. But year 3 to year 5, all your new machine depreciation will minus to 0. Because, as I told you just now, an example, your old machine left 2 years only. Means that class, your new machine 5 years. So, after the following 3 years, no depreciation. So, you consider as 0 for your old machine. But in this case, in this story, in this question, your old machine left another 5 years, your new machine got another 5 years. So you can use the same calculation for from year 1 to year 5. Clear? Alright, class. After that class, after you have benefit, don't forget to what class? You need to plus all and minus all your costs. So I give an example, year 1, 300,000 plus 30,000 plus 150,000 minus 60,000 minus 43825, then you will get your net annual cash flow. So what is the total class? $376,175, 376,175. Same goes for year 3, is the same when you calculate 376,175. How about 75? Alright, for year 4, you will get 486,175 and 486,175. Alright, class, don't forget the format of annual cash flow. You must minus with your tax. Alright, don't forget, question I give you, tax is 25%. So 25% you will times with 376,175. You will get it's because of minus 94044. Okay, it's the same for year 1 and year 2, year 3, because if you use the same rate 0.25 times 376,165, you will get the same answers. And this is different, correct? 0.25 times with 486,175, then you will get your tax rate is 121,544. So because it is under less, you can minus, you must negative it. Alright, class, why I don't need to calculate again? Because it is the same answer. Alright, class, don't forget, after you get your tax, alright, okay, I want to try to put this one table in. Okay, done. Alright, class, last, don't forget to plus. This is compulsory. This is format, alright? You need to plus. After minus tax, last column, you need to plus. Plus with what class? Plus with the same answer in changes in depreciation. depreciation. You can, but you need, just now you minus it, but now you need to plus it. 43825, alright, 43825, 43825. How about year 4? Is it the same? Yes, it's the same. 43825, 43825. You have, just now you put it at the cost, you have to minus it. But now, after minus your tax, it's compulsory for you to plus back, add back your depreciation just now. So you need to calculate, because you have calculated just now. So therefore class, automatically, lastly, then you can get your annual cash flow. So this is the answer. From the answer minus tax just now, 376175 minus with your tax 94044, and then you need to plus 43825, then you get your annual cash flow 325956. So class, year 1 to year 3, as we can see, is the same, right? So you need to calculate, you can write it back only, because it's the same calculation. However, in year 4, as you can see, in your total net flow just now, 486175 minus with your tax 121544 plus add back your changes for 3825, then you will get your 408456. 408456. So that is your annual cash flow. Alright, class, last question for question. As you can see, we have calculate annual differential cash flow. Now we need to calculate your terminal cash flow for last process. Annual, sorry, your terminal cash flow. So what is the formula for terminal cash flow? Equals to salvage value plus NWC. From where you can get your salvage value, class? In your step 1. From where you can get your NWC? In your step 4. Correct? Step 4, where is step 4? See? Net working capital. Plus with what, class? Net working capital. From where, class? Step 4. So, salvage value for this question in step 1 show the new machine is 10,000. Salvage value, new machine. Okay. Don't forget to calculate. 10,000 plus with 13,500 equals to 23,500. So this is your terminal cash flow. Alright, clear, class? So this is the whole story of capital budgeting, part of the story, alright? So as I told you, class, before you want to calculate the question, alright? Before we want to calculate question, we must do step 1 to step 4 to make your life easy. Correct, class? Alright, step 6 is question number 2. Annual differential cash flow for new machine. Next, lastly, you have to construct a table, then you can calculate your terminal cash flow. Alright, next question. As you can see, class, question asks you to calculate payback period, question asks you to calculate net present value. Alright class. This is part 1, how to calculate capital budgeting. First you need to calculate your initial outlay, annual differential cash flow for new machine, lastly terminal cash flow. All these answer will substitute in these two computation, payback period and net present value. Alright, we continue to the next session tutorial, capital budgeting part 2, how to calculate payback period and how to calculate net present value. Alright, that's all for today. Thank you. So I gone through last before we end. Step 1, extract information. Step 2, calculate your depreciation. Step 3, calculate tax for your old machine to identify your tax saving. 4, calculate your net working capital, increase or decrease. Initial outlay, the question asks you to calculate initial outlay. Step 5. Step 6, you calculate your annual differential cash flow. You need to know what is benefit and what is cost. And lastly, construct the table and you can calculate your terminal cash flow. Alright, that's all for today. On September 2012 on capital budgeting part 1. Thank you.